Hey traders, greetings to you. Just want to bring your attention to the FTSE 100 on the monthly time frame of all things. For those of you who are not local to the United Kingdom, well, the FTSE 100 is our main index. And regardless of whether you trade it or not, it's a very good lesson, what I'm about to present to you, in looking for clues for a sell, because we do have a very good sell signal on the monthly time frame. I know it's a little bit higher than what we normally go for, but the reward to risk does make sense if it does play out. So you'll notice here that last month May closed as a bearish pin bar reversal, rejecting 7,800 and the previous high here. What is more is the fact that we do have June this month, as you can see, on the brink of taking out the low, which is quite a significant sign. We can see on the weekly time frame as well that it looks nigh this break of the low. However, what I want to bring to your attention is the technical argument behind this one. Ever since 2009 and the present, we've been making higher highs and higher lows in an upward trend. We've made new highs, but are we finally having a reversal in sight? Well, the harmonics certainly look like this is potentially the case. We've got an A, B, C, D pattern here. And the completion point is exemplified by the fact that we've got, if we drag point B to A, we've got a 1.272 completion point coinciding with the all-time high. Now that is significant in its own right. What is more, if we take point B to point C as well, we do have near enough an overlap with a 1.272. But what is interesting is the fact that we've got A to B equaling C to D. So if we draw point A to B, and then we duplicate this and we see if we've got symmetry as well as kind of same distance between the two, we'll see that we do have pretty much to the point symmetry. There we go, A, B equals C, D. But that is not entirely the argument. We actually do have more in favor of this trade to the sell side. We have identified bearish reversal divergence on the RSI sitting 6, and I'm going to bring this to your attention right now. We can see that steadily over the course of the last 2 years, we've been seeing that the RSI has been making lower highs and lower lows. And now this has been steadily in play, but certainly most acutely over the past few months, or half a year, should I say. So where May we made a higher high, we certainly made a lower high here with the RSI setting 6. And whenever we get bearish reversal divergence, it's a sign to us that the strength amongst the bulls is getting less and that bears are creeping into the market. So there we have it. We can see that ever since 2016, the bears have been silently creeping in. I know this hasn't exactly been the case when you look at price action making higher highs, but certainly from a bigger, longer term perspective, we do have that as an extra factor to take into consideration with this trade. So selling at an all-time high does make a lot of sense from a supply and demand perspective. We did not have the third test, unfortunately, on this level to sell it on the level that would be breaking our rules. However, what we can do is we can simply trade this as a reversal. Given that May closed as a bearish pin bar reversal, we didn't have enough in favor to 50 fib it, but what we can do is we can trade the break of the low with our stop loss above June's high. Now, if we trade it and anticipate it's going to go all the way down to this point here at 68.79, that would be a very easy 2-to-1, risking 1%. But if we're risking 2% of our trading account, which we typically do per trade, that would be an easy 4% if it does go in our favor. And please, I would like to draw to your attention that this is merely a take profit zone. This is not our ultimate target by any stretch of the imagination. We have a lot further to go if we are looking at essentially a long-term trickler sell trade.
Okay,
now this
so
is on the
is
monthly, and we have the context of this technical argument for a sell on the monthly. But please don't forget that we can get a slightly more efficient entry on the weekly and or the daily time frame if the distance between your entry price and your stop loss is a little bit too far for your trading account in order to risk size. I mean, there's about 300 points difference between the break of May's low and June's high. 300 points, that's quite a number of points. So what you could do is simply anticipate wait for the break of the low of May in order for the trade setup to validate itself for you. But what you can do is trade a lower high on the weekly and or the daily time frame. Okay, so that is the FTSE on the monthly. And if you did want to trade it as a reversal on the monthly, please bear in mind that reversals are far higher risk than if we're trading trend-based plays, but certainly this is where the reward is if it does play out. Okay, so that concludes the FTSE 100. Happy trading, folks.